Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for UKOIL Brent Crude. The date is March 1st, 2020. If you want to stay up to date with all of our Brent Crude trading charts and other currency pairs, make sure you subscribe to the channel. Click that red subscribe button on the bottom right hand corner of your screen. Okay, so oil, bearish still, big sell-off on oil. And we see resistance zone at $52 to $57 a barrel recently broken. So price is now at $50 per barrel with a large bearish candle. So bearish meaning, if you don't know, it means price will continue to go down. And we look at the candlesticks. So each of these candlesticks in this chart represents 1 week of price action. So we see the W highlighted here. It means it's a weekly chart. So each one of these candles represents a week, and when the body of the candle, like the week finishes and the close of the week, the close of the week is lower than the lower than the open, the candle is then red, and so we see that price close quite a bit lower than where it opened, continuing this long-term downtrend that has been going on for years now. So we go back all the way to 2009, just as the stock market was really collapsing, oil prices were shooting up, but then mega sell-off, and every time price attempted to make a new high, rejected, right? So we draw these ceilings here. Every time that happens, then we saw another recently. In 2018 was the highest crude oil had been in a while, but we see rejected at that previous support line. Look how this line goes all the way back to 2008. So $87 a barrel or so. Price closed above it, then below it, then above it. Couldn't go beyond. And so now we see that price had moved into this zone here between $52.50 and $57.50 per barrel. But price historically doesn't stay in there too long, right? It kind of gets pushed out one way or the other. Pushed out. We see here just for a short couple weeks was in there. Price hung above it. Price was trying to escape back out and then was rejected. So, you think about price action, you say, okay, what happened the last time a new high was attempted to be made? Rejected. In a large, major way. So much, in fact, that price closed outside of this range. The bias candle closed outside of it. So that's bearish. So, if there's not a lot of selling happening in the next couple of months, price could just hang out by 52, but there's a good chance it's not going back above that. Let's go ahead. I'm curious about what is the volume for oil for selling. No volume data. Okay. So here's this parallel trend channel. So next targets are, we talked about this I think in last week's video, ultimately retest of the low at 28.20. We also have some support here at the $44 per barrel mark. So we could see price fall into here, cruise along between $44 and $52 per barrel through the rest of this year, but it should honor this support and resistance. And even if there is some kind of wacky global event, prices probably wouldn't extend beyond this 62.50 mark. Let's go ahead and apply this. Right, so we see if price was to be bullish, right, to reverse this, it would have to make a new high, meaning it would have to be above $72 a barrel. So in order to do that, it would have to break through a descending downtrend, 2 lines of resistance, the 20-week moving average, right? So yes, it could happen. Yes, it is possible, but it's not very probable. What is more probable is that price will continue to drop, fall. It might take a while. It might take it to 2022, but it looks like by 2022 we should see prices making their next move per barrel down to $28 visiting those lows from 2016. So have a great week trading. I hope you make a lot of profit.